The Precious Metals Powerhouse, a comprehensive guide to Coeur Mining, CDE. As of January 2026, Coeur Mining, ticker CDE, is no longer the struggling, debt-laden miner of the early 2020s. Following a massive operational turnaround and a series of transformative acquisitions, the company has reinvented itself as a high-margin, North American-focused precious metals leader. For an investor in early 2026, CDE represents a high-conviction play on the structural bull market in silver and gold. Having recently secured shareholder approval for the new gold merger and successfully scaled its flagship Rochester expansion, Coeur is at its strongest financial and operational point in over a decade. This guide breaks down the new Coeur, its 2026 production roadmap, and the specific risks that come with a stock that has skyrocketed over 230% in the last year. 1. The strategic transformation, building a mining major. The Coeur Mining of 2026 is defined by two massive structural shifts that have de-risked the company and expanded its scale. The new gold merger, January 2026. In a landmark move that received final proxy recommendations from Glass Lewis and ISS just days ago, Coeur is finalizing the acquisition of New Gold. The new scale. This merger creates a precious metals powerhouse with a projected 2026 output of 20 million ounces of silver and 900,000 ounces of gold. The premium portfolio. By adding New Gold's high-quality Canadian assets like the Rainy River and new Afton mines, Coeur has further diversified its footprint, ensuring it is 100% focused on low-risk North American jurisdictions, USA, Canada, and Mexico. Index inclusion. With a market capitalization now exceeding $11.5 billion, the new Coeur is a prime candidate for inclusion in major U.S. indexes, which typically drive significant institutional buying. 2. The operational engine, Rochester and Las Chispas. The foundation of Coeur's 2025-2026 rally is the successful execution of its organic growth projects. The Rochester expansion, Nevada. After years of capital-intensive construction, the Rochester mine expansion is now fully operational. The stats. It is the largest open-pit heap leach operation in North America, with a design throughput of 88,000 tons per day. Silver dominance. Rochester alone is expected to contribute over 8 million ounces of silver annually, making it one of the most significant silver assets in the United States. The Las Chispas integration, Mexico. Acquired through the Silvercrest merger in early 2025, the Las Chispas mine has become Coeur's margin booster. High-grade, low-cost. Las Chispas is one of the highest-grade silver gold mines in the world. Its incredibly low all-in sustaining costs, AISC, have helped pull down Coeur's corporate average, allowing the company to generate massive free cash flow even if metal prices see temporary pullbacks. 3. The financial renaissance, from debt to dividends. The most significant change for long-term shareholders is the repair of the balance sheet. In 2023, Coeur's net leverage was a source of constant concern. By January 2026, that story has flipped. Key financial indicators as of January 26. Stock price, $22.91. A new 52-week high reached yesterday. Deleveraging. The company has reduced its total debt from over $600 million to approximately $290 million. Net leverage ratio now sits at a conservative 0.1x to 0.4x, down from a peak of over 7x. Cash position. Coeur holds over $266 million in cash, providing a war chest for further exploration and potential dividend initiations later in 2026. Revenue growth. Third quarter 2025 revenue hit $555 million, up 77% year-over-year, fueled by record production and realized prices of over $3,100 per ounce for gold and $38 per ounce for silver. 4. The macro catalyst, the 2026 silver squeeze. Investing in CDE is inherently a bet on silver's role in the energy transition and AI revolution. Why silver is breaking out? Industrial demand. In 2026, silver demand is being driven by more than just jewelry. The massive electricity load of AI data centers, the growth of 5G infrastructure, and the acceleration of EV production have created a structural supply deficit for the fifth consecutive year. The poor man's gold. With gold trading near $4,500 per ounce in early 2026, silver, at $94 per ounce, has become the preferred asset for retail investors looking for a catch-up trade. As a high beta proxy for silver, CDE stock typically moves 2 to 3 times as much as the metal itself. 5. Critical risks, the anti-CDE case. Despite the bullish momentum, CDE is a high-risk investment that requires a strong stomach for volatility. Perfection pricing. With the stock up over 200% in a year, the market is now pricing in perfect operational execution. Any slight miss in quarterly earnings, even by a few cents, has historically resulted in 8 to 10% gap downs in the stock price. Merger integration risk. Integrating a multi-billion-dollar entity like New Gold is complex. Any delays in realizing synergies or unexpected operational issues at the newly acquired Canadian mines could dampen investor sentiment. Commodity price volatility. While silver and gold are in a bull market, they are prone to violent corrections. If the Federal Reserve takes a surprise hawkish turn in mid-2026, the precious metal sector could see a sharp temporary reset. Jurisdictional risks in Mexico. While Los Chispas and Palmarejo are world-class assets, mining regulations in Mexico have become increasingly unpredictable over the last 24 months. Investors must monitor any shifts in Mexican mining law or tax policy. 6. Investment strategy. How to approach CDE. The leverage play. Use CDE as a way to gain outsized exposure to silver prices. If you believe silver is going to $100, CDE is one of the most liquid and reputable ways to play that move. Dollar cost averaging. Given that the stock is currently at all-time/multi-year highs, avoid a lump sum entry. Build a position over several months to average out the price during the inevitable volatility. Watch the earnings EPS trend. Analysts are projecting 117% earnings growth in 2026. If the consensus estimates continue to trend upward, it suggests the rally has more room to run. Conclusion. The new standard in precious metals. Coeur Mining CDE in 2026 has successfully navigated the valley of death that many mid-tier miners failed to survive. By scaling its Nevada operations and aggressively acquiring high-grade assets in Mexico and Canada, it has transformed from a speculative laggard into a core holding for anyone seeking precious metals exposure. The verdict. If you are comfortable with the inherent risks of the mining sector and want a pure-play North American silver and gold engine, CDE is the premier choice. It is a company that has finally aligned its operational success with a historic commodity tailwind.